Hello and a very warm welcome to our esteemed panelists and our audience today on this session about the collaborative power of fintechs and banking 2.0. My name is Praveen Khanna and I have about 2 decades of financial services and technology experience, and it will be my privilege to be your host today. We are joined today by an esteemed panel of members from financial services industry, and it will be our honor to learn from their deep domain experience and their journeys from the physical to digital banking, and indeed their experiences in working with the fintech industry in India and globally. Before I invite the panelists to share their views, just a few highlights on the enormous growth of fintechs in India. In the year 2015, India had about 400 fintechs. This has now grown fivefold to 2100 plus in India. India has the largest number of fintechs globally after China and the US, and the highest adoption rate at 87% as compared to the global average of 64%. One estimate suggests that India fintech market at 8.35 lakh crores by 2026 in comparison to 2.3 lakh crores in 2020, thus expanding at a compounded annual rate of 24.5%. I believe 4 themes are at work for this rapid rise of fintechs in India. The internet penetration, especially through mobile. We have more than 700 million users accessing internet via mobile today, and estimated to reach about 1.5 billion by 2040. Government initiatives, the Aadhaar-based identity, rapid increase in bank accounts, including Jan Dhan accounts, building scalable platforms for UPI-based money transfer, and democratization and access of government public sources of data, such as ITR, GST, and MCA. Coupled with this, the government push to build the India stack. There have been several technological advancements as well, with the advent of big data, AI, and distributed ledger technology. Several regulatory enablers, framework for account aggregators, app-based NBFCs, the recent proposals in the budget linking all post offices online. I think it's likely to help the agri sector and rural population. Another interesting area is the emergence of BNPL and neobanking. The existing BNPL market in India is worth 3.5 billion and is expected to grow to 45 to 50 billion by 2026. Research also estimates that the number of BNPL users in the country may rise to about 80 to 100 million customers by then, from 10 to 15 million currently. There are now more than 500 plus digital lending apps just in India. I have myself witnessed this journey from a paper-based model to digital in my earlier experience. I earlier worked at a London-based financial services firm and saw the journey in over-the-counter derivatives market and syndicated lending from a paper-based model that would take T plus 40 days to confirm and match trades between buy sides and sell sides. Institutions then began a T plus 2 journey and almost a real-time journey with the advent of DLT. I see a similar journey that's underway in digital lending today, and we are excited to play a central role via ScoreMe. I'm so excited to hear from our esteemed panelists today. First up, I would like to invite Mr. Kaustubh. Kaustubh is a fintech professional with experience spanning across payments, liabilities, insurance, and lending in different functions, product, business, and program. In his present BNPL and co-branded cards at Ola Financial Services. Over to you, Kaustubh.
Thanks, Praveen. Thanks for the introduction. Thank you to start off to my fellow panelists. Glad to be sharing the stage with you. Thank you all the attendees for joining in. A warm welcome to you. Good evening to you. So like Praveen said, right, presently I'm working with Ola. I handle a couple of products here. Those are BNPL, something which is growing in nature. And I also handle co-branded credit cards piece. Just to dive in a bit deeper, I've got 7 years of experience across fintech, and it's across multiple products and across multiple roles, right? So I've handled wallets, I've handled payments in terms of UPI, savings accounts. I've also done insurance. So my experience would span across fintechs, insurtechs, and established traditional banks in itself. So I worked with DBS, which was on the verge of, let's say, something between a traditional and a digital, or so to say, a neobank. So what I would like to speak about is how I have experienced this entire industry, right, when I was operating from a bank, and my gradual journey from, let's say, a traditional place traditional financial institution to where I'm presently right now, right, which is Ola Financial Services, and how we perceive each other and how I see this market developing, right? So let me start off with what's happening today, right? At Ola, right, we have got this product which is BNPL, right? And how are we able to do this? This is completely because we have got a captive audience to the tune of, let's say, 165 million odd customers, right? That is nearly 16.45 crore people that we have on our platform, right? And whenever you interact with this digital first products, right, you always leave these kind of footprints, right, with all the terms and conditions being in place, right? With very simple data points, such as, right, where you book your ride from to where you're going, the kind of payments that you use on this particular app, to what kind of a network are you on, right? Whether it is a Wi-Fi and the strength of the Wi-Fi, or whether you are on a 4G or a 3G network, all these data points can be extrapolated to build, let's say, a profile of yourself, right? So the point which I'm getting to is, right, as a fintech, Ola Money as a brand, or Ola Financial Services as a brand, has got capability in terms of an alternate data that is residing with them, and that is huge amounts of data. The question is that, can we leverage it? The answer, to put it in black and white, is a no, right? We are not an NBFC presently. We are a PPI license holder. We cannot lend off our balance sheet, right? So therein comes the need for, let's say, a banking partner, whether it be from a backend, it can be an NBFC or a bank, so to say, right? Where we find synergies. How do we, I mean, make use of such captive audience with such a rich amount of data that we are sitting on, right? It's a win-win partnership, right? And while I say this, right, we are in the process of applying for an NBFC license. But if you look at since when I started working, right, back in 2015, the number of licenses rolled out by RBI in itself, right, are quite limited. Universal banking licenses are a whole different ballgame together. I know I'm not really sure how many have been given out, right? The stand between Bharat Pay and PMC and others is a marriage of convenience as per me, right? But apart from that, I mean, RBI has clearly laid down a rule, right, whether you have to be a payments bank or an SFB, and how it can gradually move to a universal bank. But in these 7 years, I haven't seen any fintech taking up the shape of a larger universal banking institution. And RBI has got its own reservations in place. They want to see how this market plays out, at least for the big players such as like Paytm, Phone Pay, Google Pay, right? If they're sitting on such vast amounts of data, what are they going to do with it? NBFCs is still fairly an easier, let's say, way to get into a lending business and lending off of your own balance sheet. But still, a universal banking license for players like us is still a while away. And while I say this, let me also include the part wherein the digital businesses set up, right, in the form of neo-bankings, how they partner today, right? They also have got financial institutions in the back end, right? They cannot open a savings account on their own platform, right? They are backed by a certain financial institution even today. So what's working for fintech in core is that they do not have dearth of capital. I mean, I'll talk about the larger few players. I know there are like 1,200 plus odd fintechs in India operating across different domains and solving for different user pain points and so on and so forth. But still, the larger ones, right, they do not have the dearth of capital. They have got vast amounts of data, right? The only thing which is probably not working for them is the regulations piece of it, right? And something which plays out right for established banking institutions is their capability of, let's say, underwriting, their collections process, and the ability to lend off of a balance sheet. This is where I find that fintechs like us can join hands with, let's say, the established organizations that are today, right? This not only expands the market, like I said, right? To put it into perspective, right? There are about what 6.7 odd credit cards floating in the market, and if you talk about the unique users, it will come down to about 3.45 crore odd, right? If you have to expand the market in general, right? Where do you start? Which is why this BNPL construct comes into play, right? You start off with a smaller ticket size loans, and then probably gradually help them build a credit history, and then move on to very sophisticated products like a credit card, right? And this is particularly where Ola is probably been helping out our own captive base via obviously the help of, let's say, the banking institutions to get these users on board, uh, provide them a certain amount of vintage, track them, help them with their credit history, credit behavior, and then, let's say, eventually handhold them to a larger, let's say, financial play in nature. How do I see this evolving in the future? I think it is largely dependent. I'm saying this at the expense of sounding very cliche, but yes, it will all depend upon regulations, right? The digital banking licenses, if they are going to be given out, then what kind of guidelines do we operate in, and how does it play out will be seen, right? That is something which will define the roles and responsibilities. Like I said today, right? We do not bring in the capital in any kind of relationship that is brought in by the banking institutions. And similarly, their expertise or deep expertise in their existing processes that is brought out by the banking institutions. By the time these all licenses are coming out, fintechs will also have a rich experience in all of these domains, right? So once RBI is let's say clear about all these roles and responsibilities, I think like every relationship has to end. They might go their separate ways, and the market will be a very different one at that point in time. So, but still, we'll have to see how it plays out. That's all from me, Praveen.
Thank you. Thank you so much, Kaustubh. And I think you've rightly pointed out the regulatory challenge. There's a very interesting report from Niti Aayog recently on full digital banking licenses that was put up for review as well. And they had an interesting case study on China, where they saw a very good correlation during COVID times between digital banking and increased access to credit. So I think that's something that should really play out well from the India market perspective as well. All right, I'd like to invite my second speaker now, Mr. Prasad Salunke. Mr. Prasad is former head sales and marketing, Mercedes-Benz Financial, and a fintech entrepreneur. Mr. Prasad is an automotive sector specialist with 26 years of experience in banking, NBFCs, in leadership roles, and specializing in automotive, wholesale, and retail finance. Over to you, Prasad.
Thank you so much, Praveen. And in first place, greetings to fellow panelists. Honored to be in front of this audience also. Thank you, Praveen, for inviting me here. Definitely, I would like to share my experience. But before that, as you know now that I have spent 26 years in banking, automotive. I worked with some of the NBFCs where from a lot of papers, I've seen the journey to Excel-based tools, and then of course we came to era of a general framework of lending where you have loan originating system, contract management system, and so on and so forth. That itself, the implementation was really challenging, and there is always resistance from employees, also from market. I've been through those phases. Was lucky to work with a very progressive bank. Worked with HDFC Bank for a decade. I've seen really huge technological advancement in those 10 years, multiple waves, or what we call is sprint. And from there today to completely paperless, that's what we're talking about. And I think this journey also brings a lot of experience in terms of what are the on-ground challenges, what are the challenges customers face, but not only customers, what are the challenges banks are facing, where the efficiency is getting hit, the innovation is getting hit, and also credit risk, and so on and so forth. And on that background, I think today's fintech world really brings, I will say, bridges the whole gap. Definitely banks want to provide innovative, agile, faster services, also products, but at the same time, banks do also have a lot of restrictions, also challenges what banks are facing today. And keeping that in mind, what fintech brings is a completely different behavior. And that behavior is in the way of the way things are done. Look at some of the examples of neobanks. I was reading an article on one of the neobanks recently got funded, and they're opening 6 million savings account per month. At the same time, some of the established banks, they are not even crossing 30,000-40,000. It talks about the difference between how a fintech is doing things and also the banks. It also brings the regulatory angle and also growth potential. And the footprint what fintech brings is very, very different. And that's the reason banks are now either investing, they're acquiring fintechs, or collaborating. You open newspaper, at least you'll find 1 or 2 tie-ups from PSUs to commercial banks, private banks. They're shaking hands with fintechs. And that's where I think the whole collaboration in terms of fintech and bank, what we see is today customers spoiled for Amazon kind of experience. The customers crave for a faster service completely. And that's the reason everywhere the term UI, UX has been widely used. And while banks want to offer that, I've been working recently after I left my job, and as I'm working on fintech topic, I was also approached by 1 or 2 cooperative banks, and they want to really shake hands with fintech, saying, hey, we not only want to increase our footprint and also want to change the way we deal with customer, but also we need help in terms of setting our processes, and can we use technology to really expand our business and to look at future. I think from a future outlook point of view, one key thing is not all banks will go this way, but many will go this way, right? And there is a huge opportunity in terms of cooperative societies. I'm dealing with one of the cooperative societies where they want to install technologies on cards. Of course, there are a lot of restrictions in terms of regulations and other factors, but that's where also opportunity lies. I saw a lot of fintech tie-ups with a lot of private banks. I also saw few with PSUs, but there is a huge opportunity when it comes to cooperative bank, and also application of fintechs at different point of sales. There are different sectors where we can definitely go along with bank as fintech and change the whole customer experience. But also, I think fintechs are solving problem for banks, but also the sellers. Yeah, and factoring is one of the example where we see the traction.
Thank you so much, Prasad. Thank you. Really appreciate the comments, and very hopeful that you will also transform the auto lending experience as well.
Thank you.
So I know we, from your example of cooperative banks, we've been very closely working with some cooperative banks in India as well. And we see huge potential in automation and bringing technology from a lending perspective. So we've been certainly doing that. All right, next up, I'd like to invite Mr. Shishir Singh. He is Chief Manager, Project Finance at SBI. Mr. Singh has experience in credit appraisals of projects in roads, metro, railways, and power transmission sector in the PPP model. Mr. Singh has managed portfolios worth INR 230 billion and has also led stressed asset resolution. Over to you, sir.
Hello, everyone. This is Shishir, and thank you, Praveen, for introducing me. And Prasad, I'll take you from what Prasad was speaking regarding fintechs. And definitely the point that here is that, see, I can give you the other perspective, which comes from banks. And anybody would appreciate the fact that the banking was entirely manual. It was a paper-based drama, to be, if I may say so. And how gradually we have moved to more of a digital platform today. And it's not just outward appearance that is there in terms of digital change which has happened. It is also internal change that has happened over a period of time. We were doing everything manually till 2002, and then we went into computerization while other banks were still grappling with other issues. Then, therefore, we saw that there was an urge in our bank to actually match the capabilities of private banks and foreign banks that were coming in, and they were actually taking away our customers because of the efficiency parameter, and also the way we have been providing services. So the consistency becomes very important. Now, how do you deal with it unless you do not have the data clarity? And the traditional method of ETL, extract, transform, and load, doesn't work with big data. So most of the data that we had was unorganized and unstructured, and we always thought that we need to do something first to at least digitize whatever information was coming in, so that there's an institutional learning over a period of time. Then we realized that we need to automate something without breaching any of the regulatory guidelines which RBI has prescribed, without compromising with the data that the customer is providing us in good faith. Having that in mind, 2015, we had an entirely, internally developed software, which we call LLMS. And whenever we do project finance, the kind of contracts that are involved, it's the copious details are there. You cannot just, put everything in one page or 2 pages. It takes voluminous data to actually prepare and appraise a proposal. Digitizing that has not only, contributed environmentally, but has also enabled SBI as a bank which has voluminous data to develop institutional learning over a period of time. And I must give credit to the fintechs who have actually provided, help to the bank, because everything cannot be worked right from the beginning, right from the scratch. So take an example of PAN card verification or any voter ID verification, which was manual, and you saw fintechs must have faced that challenge in the beginning, that the verification through manual process was always dicey. So today we are fully enabled. all the eKYC that is happening, and thanks to RBI and the regulator who have been very proactive in timely introducing all these technologies, we are actually now going a step ahead, and we are moving ahead. As you would have seen, we have done few acquisitions, including Cashfree and Pine Labs, wherein we have put in some money. And we are also talking to many account aggregators who are coming up with innovative solutions and providing us to, all the material to move forward. And we have all the fire there. So that's something which everybody needs to appreciate, that for a large bank, it does take time. I'm hopeful that going forward, we'll have an approach wherein we'll be talking of open banking, which is still a concept very much, not everybody will be informed about it. But that is something, it's a wishful thinking. I'm not sure whether that would happen, because RBI will have to chip in and provide all the help there. It's just that for blockchain, we have been very bullish. On blockchain and smart contracts, we have already moved forward. We're working with few of the startups, and few of the startups have been approaching us to provide, to collaborate, as we're talking of collaborative approach. So not everything will be done by SBI there. We are actually looking for agile startups who could actually help us there. Now, the only concern that would be there, as you would have read in the news recently, that one of the retail lending apps, how the data were actually, made public, and there was some compromise made for the data that was made available by the customer in good faith, and RBI would come heavily on this. So as a bank, as a responsible bank, and as an old bank, would like to be very, very cautious about it. So wherever the collaboration happens, it has to happen with certain degree of, compliances, rather 100% compliance that has to be there. Finally, I would like to say that the project finance vertical itself is so huge that we are going into geospatial analysis, and we are leveraging all the data that we have to monitor a project. So this is something where none of the startups are actually approaching us. They are working in silo-based environment, but they're not approaching us. We are pretty hopeful that as SBI makes its intent more pronounced and more visible to everyone, I think few startups would come in this space also. It would help bank. So as on date, as we speak, we are talking of India. Leave India aside, and if you talk of China, which you consider a developed nation, there also at least 12 million MSMEs are unbanked as on date, leading to $1.8 trillion of unserved market there. So India still is an underdeveloped country. We cannot expect, developing country. Sorry to say underdeveloped that way. But yes, we are hopeful that our fintechs would be enabling us to reach to hinterlands, and we'll be doing. That's all from my side. Thank you.
Thank you. Thank you so much, sir. I'm really excited to hear about your partnerships with fintechs, especially around the account aggregator model. My personal view is it is yet to take off. It's still in its very nascent stages. And it could do what UPI has done to the payment space. I mean, this decade could really be about lending from that standpoint. And I'm very, very interested to know about the geospatial work as well. Very interesting, sir. Thank you so much for sharing all of that. All right, I'd like to invite our next speaker, Mr. Mayank Tiwari. Mr. Mayank Tiwari is the founder and CEO of Resha Mandi, India's first and only silk agri-tech startup. Mr. Mayank aims to help rural India by providing sustainable livelihood, financial inclusion, and making them rural super consumers via Resha Mandi. This is aligned with his vision to build India as a silk powerhouse that would streamline the silk industry and empower stakeholders in the ecosystem. Over to you, sir.
Thank you so much. Thanks for inviting me here, and thanks for the, making me part of this wonderful panel, and thanks for the attendees to basically join us. Resha Mandi is fairly young. I mean, we are 2 years old. Everybody here has decades worth of experience, more than what we come up with. And the other factor is we've just recently started our foray into fintech. Idea was that most of the B2B players at some point in time face this issue that there is, you're giving out credit in the market, making sure that the stakeholders kind of stay put with your ecosystem. And that is when most of the B2B startups also start realizing that it's finance that may just help out the stakeholders with their working capital or increased production capacities or anything of that sort. And that's when you need the collaborations to happen. So as on today, we've been collaborating with a lot of NBFCs. We've been in discussion with a lot of banks, making sure that our stakeholders kind of get asset-backed loans or It could be through ankle-led financing. It could be through asset-backed loans. But we want to be able to enable the other fellow panelist was talking about, that there are so many SMEs who have not been served in the market. And specifically in any of the natural fiber space, if you look at silk or you look at cotton, it's an unorganized setup. The problem is, how do you underwrite them? With a platform like us, it becomes easy for you to be able to underwrite them, primarily from the basic fact that we have the transaction data. We have a transactional history with them. We are trying to build out, we're trying to make sure that they are doing whatever they're doing in terms of the revenue, which is coming on a, it's not a black economy, it's not cash economy that they are now focused on. Resha Mandi, on 7th of July last year, we kind of decided that we'll not deal in cash at all. Though we are in agriculture sector, we could actually do that. Government allows you to per invoice approximately 2 lakh worth of cash to come in. But we decided that we'll go digital on the transfers, whether we receive the money or we give out the money. That allows most of the stakeholders to also build out the credit history. And that has effectively what has taken shape as Resha Mudra, which basically means mudra being the money itself. So idea of Resha Mudra has always been that we want to be able to help each and every stakeholders that is part of our ecosystem. We work across the board. We start from farmer, and sometimes before that, all the way up to the SME segment of retailers across India. Today, we serve more than 1,000 PIN codes in India. As we progress further, we want to be, while we are diversifying in fibers, going to cotton or going to jute or wool, we want to be able to create this entire ecosystem, bring in the power of, financial lenders who can back their, underwriting on our transactional history, and then be able to work with us. We can help them with technology, whether it's AI, ML, blockchain that we are talking about, but that's the collaboration that can happen, and that I see as a future of lending. Thank you so much for that.
Thank you so much, Mayank, and wonderful listening to your journey, and more power to you. There's definitely all the innovation happening in the agri-tech space. Very, very excited to hear about that. So I would now like to invite our next speaker, Mr. Vaibhav Kaju. He's an alumnus of IE Business School, Madrid. Mr. Vaibhav comes from a rich experience in BFSI of more than 20 years and has been recognized as one of the 100 top most influential BFSI leaders by the World BFSI Congress recently. He made his mark in companies such as Deutsche Bank, DBS, and TransUnion Sibyl. He has predominantly worked in new age banking platforms and emerging alliances in the digital space. He now is the co-founder at Mahila.Money, a neobank for women. Over to you, Vaibhav.
Thanks a lot, Praveen. What a esteemed panel that is being set up over here. And thanks a lot for getting me last, because I could make a lot of points and very interesting points that were coming by everyone. So before I jump into what I initially thought of speaking, there were some things which I would like to highlight, which others said, and they were actually part of the points that I wanted to cover. So, for example, Kaustubh talked about being backed, neobanks being backed, and fintechs being backed by banks, and that's a very important point which he raised. We ultimately end up looking at, from a regulatory perspective, what a bank can do. But what a fintech or a neobank ends up doing is creating a layer of service around what is permitted by the bank from a regulatory perspective, but what a customer is actually looking for. So I'm not as open as a Google or a Facebook, because there are a lot of regulations that I need to still follow. But ultimately, the customer who's out there, and here I would just touch upon what Prasad talked about, the Amazon experience. Customer, be it 6 of us over here or all the audience who's listening to us, are used to an Amazon or a Facebook or any other platform. They expect the same experience. So, example, Asari, who's our CEO, says, and I think she says absolutely correctly, that a poor customer also is not looking for poor service. From a service perspective, everyone looks for the best possible service. And when you're used to an Amazon kind of service or a Facebook or a Google kind of service, when you're used to getting your research out within seconds, you want your banking money also coming into your pocket within seconds. Kaustubh and I have worked together at one point of time at DBS. There was an overlap over there. But looking at our journeys individually, when I was doing my MBA, I had to go to a library, spend 3 hours looking for a book, then looking for a content, then maybe finding half the content in a book, then spending another half an hour looking for the other book. Whereas when Kaustubh was doing his MBA, he had everything out there on his laptop. And people who are coming out right now have everything out on their smartphones. And I think that's the experience which people are looking for. One of the speakers also raised a very valid point of, I think, Praveen, that was you, about check clearance. And I remember my Deutsche Bank days and why everyone in India wanted their bank in Fort. Because Fort as a PIN code had a same day clearance. So the first branch that would come in Fort branch. And, you know, it was a very funny thing. Whenever you walk out, it would feel as if you're walking from one bank to the other. And everyone on the road eating vada pav or eating anything was a banker, wearing same pinstripe suit, wearing similar tie and a jacket, because everyone wanted a Fort branch for the same day clearance. And now with that thing going, why would I want to open a bank in a Fort branch, which is horribly expensive, is cluttered? I think at one point of time, there were 172 banks operational in a very small area of Fort. But today, as we set up Neo Bank called Mahila Money, we are a remote operational organization. Our teams are based out of wherever they want. I'm luckily now based out of my hometown called Jodhpur. And all my team members, everyone are wherever they want. In fact, some of us operate sometimes outside the country if need be, because technology permits us all that. Coming back to what I wanted to actually cover, a few things which were covered by initial speakers. But what's also very important to keep in mind is the population that we are wanting to service, especially with respect to Mahila Money. We are looking at getting women onto the fold. We look at mobile penetration. If you look at mobile internet usage, it's tremendously gone up. What it has also done, one point which I mentioned on Fort branch, but the other thing which is also what internet mobile has done is that they have clearly finished the divide between the urban and the rural. Today, if I have internet in my hand, whether I'm sitting in Jodhpur or I'm sitting in a village or I'm sitting in Bombay, I get access to the same financial product, to the same service anywhere I am stationed. And if I look at the population expansion, I'm looking at 430 million women in India, approximately slightly less than 500 million in the age group of 18 to 54. That's what we are wanting to service. But when I come back to what's happening in the credit, and I've before we started the call, what I was discussing, having worked in multiple organizations, the advantages I have idea of multiple organizational level data that's happening. So credit bureau, if you go to, not more than 40 to 60 million people in India are currently on official credit, formal credit, which also means if I look at a gender divide, 22 to 23% are women. Now look at the population which is on formal credit versus the population which is out. And what also ends up happening is the old age economy, if I may call it, is an economy where you go and there was a cost. So insurance, I think Costa was mentioning about insurance. When I started my insurance journey, I had to take a 40 question or a 50 question, 8-page form with me every time I went. My bag always had 20, 30 additional forms because I didn't know when the next set of forms would come into my branch. And I would make sure that none of my customers spoiled my form, because my form was the most important thing. Whereas today everything has become digital. A lot of forms get pre-filled, pre-qualified and things like that. That also means that I don't have to go to the customer. In my times when I started my insurance journey or a banking journey, if I had to go to the customer, I had to look at the cost. There was a taxi fare, there was a real estate cost and everything. And my cost of customer acquisition was very different. Today, because it's digital, if I take Kaustubh's example, if I'm taking a Ola ride, in that ride itself, Kaustubh can plug in 4 products for me. And my cost of customer acquisition and multiple products coming into the journey comes in one go. So that's what digital fintech is ending up doing. Also, what it is doing is it is getting the customer the best customer experience. again, I'll take one example of when I started my career. The products which would come, usually they would get on the financial side, there would be a formal training that would happen. And that meant till the time the zonal training manager would not go to each and every branch to train, the people would not be able to sell. And so even if the product was available, till the time the training was not done, the entire rollout did not happen. It would not happen that way. But today, if Kaustubh or I or Mayank or anyone is launching, even in SBI, YONO as an example, as a classic example, the way SBI has transformed the entire banking operations through YONO. Today, I am based out of Jodhpur. My father has been a SBI customer even before I was born. And the experience he would have got when he was at my age and today I get through an SBI customer is totally different. And today, as someone sitting in Bombay, someone sitting in, again, my city, I'll take an example, Jodhpur, or let's say Durgapur or Bhilai, which are very popular steel plants, end up getting the same experience, same quality, same product on same time. So what Fintech is doing is threefold, sub: better service, better reach, and faster experience. So I get all these things, and that's the customer side. Now look at from a business perspective, the biggest advantage business gets is a very targeted campaign. I'm working with a financial institution I can't name. That institution today has the possibility of giving me gender, family household income, PIN code, a lot of other data points, which are very relevant for me, which I would not have otherwise known. In erstwhile situations, I would have put a hoarding in a city. Let's say if I take Bombay's example, Bandra hoardings are very popular, or maybe a Nariman Point hoarding is very popular and super expensive. I spend maybe a lakh or so on that hoarding, and I have no clue who's watching that hoarding. Would he or she be reacting to my hoarding? If he or she even reacts, when the reaction would happen. But today, with Fintech and all these targeted campaigns that can be run, I know when Kaustubh would be thinking about my product, and I position my product then. So that also means that if, let's say, Shishir and Prasad, sorry for naming you, but let's say you are not my target customer and only Kaustubh is, I can now go only to Kaustubh's handset and show him the product that is required for it. So all these benefits that are coming are helping both demand as well as supply, and bringing the overall cost of customer acquisition down for companies, and from a customer's perspective, pushing up the experience. The experience has gone to a different level. And again, I have done 2 MBAs. My first MBA was done when Google was getting launched. My second was done when I learned about Web 2.0. And today, all of us are reading about Web 3.0. And I'm sure there are many more things to happen. But before I finish, what my thought over here is the embedded finance thing that's coming, and how I can do a lot of pre-approved things. Prasad sir has been a part of automobile industry for a long time. He would remember, if I had to buy a Merc, let's say 15 years back, the kind of financing headaches. I took my first home loan back in 2005. And if I tell it to Kaustubh or someone from the younger generation, they'll never believe. The bank that financed took 2.5 months to finance my home loan. Today, if I take even 2.5 days, the customer would be fed up. And I was patiently waiting for 2.5 months. I didn't do anything. I didn't go to the other bank. I waited because experience was different. So as experience changes, our delivery has to change. That's all.
Perfect. Thank you. No, wonderful listening to your views, Vaibhav. And as a proud father, daughter, I hope she'll be your customer one day. She'll be using Mahila.money one day. I really hope that happens. So, I can totally resonate with the book experience. I come from that generation as well. When I applied for my first home loan in the year 2002, 3 months is the time it took me to get a loan. I can totally relate with the Ford branch experience. I used to do the journeys as well, moving from one bank to the other. And now we can do this web conference. It's just times have totally changed. And COVID has brought about that complete shift as well. So very happy to hear any closing comments now. Kaustubh, do you want to start first?
Hey, thanks again. So couple of things which I wasn't able to touch, and probably which I'll bring in my closing remarks, is that, like I said, right, The captive audience part, when I said that there are 16.5 crore people on Ola, right? What it empowers them to do is that have a front end role or a customer facing role, right? And that is where the responsibility lay with a fintech such as Ola, right? In two terms. One is the innovation part. How do you innovate, right? If you are close to the user, if you are able to interact with them, uh, you can understand their pain points, right? Second is the transactional data that is helping you do all of this. So innovation, where is it going to happen, right? If you're closer to the user, if you're able to understand and let's say ascertain their pain points and make their life simple, then that is where the innovation will come from. And like Weber said, where is this all sitting, right? You have got a bank in the back end powering all the functions. You have a tech layer like an Ola sitting in the middle, and then you have got the user who's responsible for this entire let's say front end part or negotiation part, right? The innovation part is kind of resting with this fintech layer, right? So that is where it will probably come from, and which is why it will probably have a larger say when in the relationship going forward. At least my view of it might be completely wrong or incorrect, but that is how I feel it might be driven, right? Second part is obviously RBI has been like, at least in my 7 years of experience, again, really proactive. Innovation actually came from regulations also, right? When they mandated that UPI needs to be live on a certain set of savings accounts, see how it has, let's say, ramped up the likes of Google Pay or Phone Pay, right? I cannot even start talking about their scale. While you, in itself, regulations, you might see them as restricting or subjecting you to certain compliant factors. I see that innovation can also happen from their end, right? So there are two parts to this. One is where this distribution layer is sitting in, and the other part where the regulations play out, right? That will probably be it from my side, Praveen.
Thank you. Thank you so much, Kaustubh. Mr. Prasad?
Thanks. I think closing comment from my side can be, what I see closely is banks are modernizing with AI, ML on the technology side. While there is a huge drive for innovation, fintechs do have a major role to play. And, specifically, and I missed one point to talk about when I opened up, I think the risk management is also key. Yeah. And the amount of let's say finesse or technology what fintech brings here with data, AA, and a lot of other things. Yeah, I think, and I'm also going through a lot of technology which really helps banks to reduce the risk or let's say NPL, specifically on the PSU and cooperative bank side. Yeah, this is going to be a very, very big collaboration.
Perfect. Thank you so much, Prasad.
Thank you.
Mr. Shishir?
Yeah, so my special thanks would be to Mayank and Vaibhav, who are actually, there on the field, providing us live feedback on the ground from the ground, that how the technology has been actually, helping, and how it has changed, and how they are leveraging the same to provide a better service to who actually matters, the customers, the end customers. The only thing is that, see, as it spoke about YONO, that is something we were actually trying to collate views from the users, that how they are feeling about it. And I think it has come right from the horse's mouth when Weber said that it's doing pretty good. One of the achievement that we, again, I would give accolades to the regulator, is about the life certificate, which is now, you need not, your elder ones need not visit the branches, and they are uploading it online. Right from this December, this has become much more of a smoothing process that we have experienced over a period of time. Only concern that remains is, as rightly pointed out by Prasad, is the data security. So innovation cannot go alone. There has to be enough compliances. I would repeat that, because regulator, if they have been proactive in order to excel that growth and in order to fuel it, we would require exact compliance with the guidelines that are there up to date. We cannot ignore it. And yes, innovation, it's not an impediment for innovation, and innovation should continue. And we are hopeful that with the metaverse coming up and the volume of data that is being processed, that would keep on increasing. SBI would also learn and would also, keep moving with you. So that's my closing remarks. Thank you.
Thank you so much, sir. Mr. Mayank?
Thank you again. So my closing remarks is very, I've basically gathered a lot of knowledge, to be very honest, though I'm part of the panel. But I think the good part is that everybody is talking about innovation and experience as being the major factor as to how fintech and this collaboration would work. And that me being very close to the customer, I can relate to it, because like someone was saying that, it's not that the poor customer is looking for a poor service. Uh, Everybody is looking for a superior service. When we work with a farmer, when he tells you that, he feels that you are an Amazon for him, it kind of gives you the kick that you're looking for. And that kind of experience also drills down when you're working on fintech layer or anything of that sort. So that's my closing remark. Thank you so much.
Thank you so much, Mayank. Vaibhav, any closing remarks?
Yeah, so actually, most of the things were covered in the beginning by me. But having said that, no, Mayank's point is absolutely right. The customer feedback, and like Shishir also said, getting customer feedback is the most important. And what we tried to do is we still continue doing, and I think a lot of fintechs are doing the same, is getting the customer feedback before going live. It's always better to take a session with the customer, preferably do a one-to-one. And that's where what we have realized, and this is not only me speaking, it's from an organizational level, we want to be more of a phygital, where we have some kind, and when I say phygital, I'm not saying physical branches are required or something, but for example, and Prasad's point on risk management, that's very important. It's very easy. I don't want to name a bank, but at one point of time, I worked in a bank where we started PL. Within a few months, we did 500 crores, and next 6 months, it was a nightmare collecting that money back. So, and all of us would remember those 2005 and 6 era where you would land at the airport and just with your boarding pass, you get a credit card. So giving credit is the easiest thing, but making sure that risks are in place, that's most important. And I think what fintech can bring in is a lot of alternate data. A lot of data which a traditional lender may miss out. So there are 2 pain points which we can address. One is making sure the bad risk doesn't come in. Second thing is letting good risk come in, which we may otherwise miss out. So if we can look at getting more data from the customer, Shishir talked about metaverse. It could be metaverse. It could be meeting the customers, it could be doing tele underwritings, it could be, I think what will be a future for credit underwriting would be video calls. Having a video underwriting done. Nothing beats that, because you get liveliness of the customer, you get what facial expressions are happening, a lot of things happen on it. So more and more data you get, and it need not be only pure financial data, alternate data through metaverse, through customer experience, through engagement, and make your credit policies most suitable for getting good risk come in. That's what would be the future.
Thank you. Thank you so much, Vaibhav. And I think my broad 3 takeaways from this session, I think customer is king. The customer journey matters the most. And that's where innovation, for instance, the idea that you just spoke about, the video credit appraisal, that could be a great theme to play forward. I think the regulator, the role that the regulator has played, and the proactive and the positive role that the regulator has played. And lastly, data security, that is of absolute essence. Those are my broad big 3 takeaways from the session today. Huge learnings, absolutely blessed to be in this panel today. And really appreciate all the comments that have come up. Happy, I think we have about 10 odd minutes. Happy to share a few questions that we've received from the audience. And really anyone can take these questions. One of the interesting questions that has come up is how do we expand the role of account aggregators in India? I know it's just still starting off and it's yet to take off. So how can there be an enablement on the account aggregator model? Anyone,
So let me take that question. I think account aggregator is still stabilizing, if other panelists permit. My point was that we have seen a few of the similar experiments being done in the insurance sector. You can say Policy Bazaar is again, something which is offering to people looking for insurance. Now, this has been in discussion with the regulator. The only concern has been how the data would be protected, and so there has to be required encryption in place. we are being approached by many account aggregators who are in the experimental stage, and we are recently seeing many acquisitions happening wherein all the, as I was talking in the beginning, that all this fintechs working in a silo-based environment, they need to come together and offer a holistic solution that would be leveraged by the banks while before they share the data with them. So ultimate requirement in an account aggregator system is that the bank should feel free to share the data and rather extract the data from account aggregator, and the customer who is providing data to account aggregator should be trusting the account aggregator platform. So we are pretty sure that very soon we are aware of the circumstances and we are aware of the developments happening. We cannot name companies, but there are companies who are in full readiness to launch account aggregator platform, and they have actually taken care of right from start of sourcing of data to monitoring and recovery from those accounts. All these things and features would be enabled in these account aggregator platform. So that's it.
Thank you so much, sir. Here's another interesting question, and this really talks about data security. So how do we build greater trust with customers, especially given recently RBI found that more than 600 plus lending apps were found to be fake? So that's been a big issue, and greater adoption will only happen when there is all banking is really about trust eventually. Vaibhav, Kaustav, anyone? Go ahead, Prasad.
Yep, let Prasad go.
No, go ahead, please. I'm not.
So that's slightly complicated from a regulatory perspective to answer. But what I can answer is the trust factor, and that's super important. So whenever we have met our customers, trust, and it's not only that we are new or anyone else is new or old. Trusting the current banking also is an issue. So financial products, the trust is the most important thing, because it's not a tangible product. It's not a soap that you're buying that you can touch and feel. It's more of an intangible product that you're buying and the service that you're getting. So trust is super important. There should be a lot of checks and balances that need to be placed. If you remember a few years back, there used to be, and they still happen, different kinds of phishing attacks that happen. And we need to put in more trust into play. How can we create, maybe at least within the ecosystems, if we could have better recommendation engines, people talking to each other instead of just the organization talking, customer feedbacks live over there, more of a community-based engagement that can be done. People knowing and recommending those kind of products coming into play. Those are the kind of trust factors today I can speak of. The other thing could be if there could be a standardized place like an ISI mark or things like that. So every fintech, if it's certified by a place, it need not be regulated, but at least is certified by a body. That may also help. But those are my thoughts. Maybe Shishir sir or someone would be a better placed person to answer.
Shishir sir, you want to add to that?
No, I would just say he is well covered. Ultimately, it's the fundamental, and RBI has provided certain sandboxes to all the fintechs, and whatever he's pointing out is already there. So regulator is keeping a very close eye, and regulator is very proactive. So we all are always critical about regulators saying that they're coming down heavily on the banks and not allowing them to grow, but that's not true. I think one of our regulator, that is RBI, is one of the fantastic one, and you would not find parallel. There are certain chances, scope for improvement, but whatever they're doing as for now, I think it's commendable, and we must give them that.
And Vaibhav, to your point on verification, so RBI has recently suggested setting up of a body called Digita. So it's called Digital India Trust Agency, and they will essentially be doing verification of all the eligible apps. So only the verified apps can then be used by consumers. So that's a really big step in the direction of consumer protection. They've also spoken about setting up of a National Finance Crime Record Bureau. So that should also help in this segment. So I have another interesting question that has come up, especially in the context of digital currency. So the central bank has spoken about the digital currency. How do we see the impact on lending, as the fear is banks could lose cheaper sources of funds via deposits? Shishir sir?
I think I'm taking away this from people who are actually using the digital currency that way. So CBDC is not something banks would be worrying. It's just like, that if you would recall 2000K problem. So, something would evaporate. Then ATM came, people started saying, my money in a digital form, if I go to ATM, somebody else can take away. So that's not going to be seen. It's the volume is huge, as Vaibhav and Mang, they're talking about credit access, which is yet to be given to hinterlands. The volume is huge. Nobody should be scared about it. Whether it's a small bank or it's a big bank, everybody would be benefited out of it. I do not see it. Other panelists can come. That's not a challenge.
Vaibhav, you want to add?
No, he is absolutely right. There's enough leg room or space for everyone to play. What may only happen with the cryptocurrencies and all these kind of currencies coming in is that it may reach places in a faster way. That's the only thing. But again, we all need to understand, I think out of 100 people who speak about crypto, 95% people don't know also what's happening. So what is, and that's why I've just made up numbers. I may be wrong in these numbers, but large population doesn't understand even when they talk about it. So what's very important is to understand how it works, and it'll take at least a few years, if not longer time, for people to understand how it'll operate. There would be some teething issues, like Shishir sir rightly pointed out. I remember Y2K issue when it happened, and ATMs and net banking, and people talking about. A lot of us would remember in the initial days, offices which had computers did not permit shoes inside because computers would get spoiled. So when people don't understand, there is this sense of unknown risk, and that risk creating kind of legends around them. So I would say there would be some problems, but everything, it's like water will find a place to flow. So and none of us will actually be hit or tremendously bothered.
No, well said, Vaibhav. And thank you so much for your comments on this. Any other final feedback? We're right around the hour. I can see. Any final comments? I know I've learned a lot today. I think my big three takeaways, I think customer is king, several innovative models that can be developed. I think regulator playing a very, very proactive role and a very good role. And finally, data security. That is of absolute essence. Thank you so much again to this wonderful panel. Really, really appreciate your time today. And until next time, it's bye for now. Thank you.
Thank you, everyone.
Thank you so much.
Thank you, everyone.
Thank you. Appreciate it.
Bye.
Bye.
Bye. Bye.